of the YouTubers currently are, pushing their agenda and saying that AMC and GameStop are going to do great, but they don't want to tell you when to buy or when to sell, and they're not going to share their positions or tell you when they sell, and that they only think it's going to go to four figures.
I mean, they're saying that it's going to go down. They're saying not to buy it at all, like it's a horrible play, etc. I'm talking about like the generic.
Well, here's where they differ. Is I do think they're going to go down a little bit because this is a goddamn stock market crash. And then after that, when the market is at its worst, those stocks like AMC and GameStop, Sundial, BBIG, BBY, MMAT, Progenity, you name it, Cost, Express, they're going to fly to the goddamn fucking moon. It's going to be one of the most beautiful things we've ever seen. Except these other bastards, these YouTubers are just, they go out and they give half information because they have no idea what's going on. They have no fucking clue what the fuck's going on. I told you guys earlier it was a fucking fake pump, and look at where we at. Everything was fucking green earlier today. All the stocks on the stock market practically were red, except for the indices, because they're actually buying the indices themselves, the SPYs, the NDXs, the triple Qs. They were just fucking buying them up to artificially pump the fucking NASDAQ, Dow Jones, the S&P 500. Meanwhile, and as if you guys didn't notice, Mexico was up a percentage point today and erased all of its goddamn fucking gains. I told you guys at 12 p.m. Eastern time that this is a fake fucking pump. This is fake as shit. And if you're buying that dip on the stock market expecting it to go up, you're going to get wrecked. They're lining up the bag holders. Everything they did to the people at AMC and GME to try to get us to buy in before they dump the price more is exactly what they're fucking doing now worldwide on mainstream media to everybody.
Did you get all that, Lou?
Check this shit out.
There's your next video, you fat bitch.
Watch this, Lou. Maybe you'll fucking learn something, you dumb fucking piece of shit.
Watch his next video, just like what everything you just said.
Oh yeah, if you guys like Lou, go Google Louis Bravo court case so you can see what kind of mail fraud, wire fraud, bank fraud piece of shit he really is. I told you guys earlier, I'm certain this green is a fake out bull trap. Everything is red except the actual indices. They're not even buying stocks anymore, just the indices. Liquidity is complete fucking shit. The market crash is imminent. The MOASS is imminent. They're coming right here. The market's going to crash, and I think everyone is going to have a wonderful opportunity to buy AMC and GameStop, BBIG, Cost Express, BBY, Sundial, Progenity, all these fucking meme stocks at dirt cheap fucking prices. And if people are smart, I'm not a financial advisor, but I believe that if people are smart and they buy up and down the strike chain from near at the money all the way to deep out of the money, that would cause an actual delta hedging situation that would bring a lot more calls in the money, which would allow us to make, just us being retail in general, to make a fuckload of money when they delta hedge and short squeeze on these plays, selling a percentage of our calls for the premium and using some of that money to exercise a percentage of our calls as well to get a lot of shares. Thus, the market maker would literally get bent the fuck over and have to deliver our shares for any price. So if you got $145 calls or $90 calls or $60 calls and the stock price is now $500 a share and you sell half your calls and exercise the other half, you're going to make a shitload of money on the premium, and then you're going to fuck the market makers in the ass and force the price up even higher by making them fetch you those thousands and thousands of shares that you just exercise your calls on. So they have to pay $500 a share to give them to you for $60 a share. That's a great fucking deal if you ask me. But what do I know? I'm not a financial advisor. That's just my guess. So this market's gonna fucking melt. And there it goes. And we're gonna fucking watch this shit until it melts, until the stock market closes. Because this is gonna be twice as bad before the end of the day. Twice as bad as what it is right now. Japan was down 2.8% last night. New Zealand 1.7%. Australia a percentage point. China half a percentage point. The Shenzhen, the other Chinese exchange, was down 0.9%. Europe was flat. Italy was down 0.38. Our market's going to continue to get wrecked. The NASDAQ's down negative 0.58. Mexico erased all its gains for the day. Let's take a look at the fucking futures. And now the S&P 500 E-minis is down negative 0.53. NASDAQ negative 0.55, negative 0.51. And for the Nikkei in Japan is down negative 1.34. What the fuck you think's coming next? They're not going to the goddamn moon. The S&P's done. I think it's cute though that the U.S. Treasury bond is up half a percentage point after losing an entire percentage point yesterday. Nice try, Fed. Nice try, BlackRock. It's going real well for you, isn't it? You guys are fucking gangsters. What's going on over here in the think tank? What kind of crazy shit you guys got for me today?
Oh, how do I?
Well,
Nothing good.
Well, would you just look at it?
Crash and burn, baby.
Gee, we're off to a great start. What a wonderful start. Good shit. Thanks, Denimator. Appreciate the DD over here, man. You guys in the think tank are fucking killing it today. Chinese banks offshore debt shows impact of Evergrande. Of course. Of course. Told you guys 6 fucking months ago. You starting to detect a pattern here? Biggest drop in short-term borrowing since March of 2016 reveals cash crunch. Offshore, look at this. Offshore debt at Chinese banks took the biggest drop in 5.5 years last fall. This was January 20th of 2020. Obviously today, January 19th, 2020 here in the States, because this was in Japan. Chinese banks took the biggest drop in 5.5 years last fall in what capital market watchers say points to a credit crunch triggered by cash-strapped property developer China Evergrande Group's brush with default. Contagion. It's here to stay. It's here to fucking stay. How we doing? See how Bloomberg was treating us. Let me show you guys just a little while ago. And this is why I wasn't streaming earlier, because there's absolutely no point with the artificial pump that was going on. I knew I would just be wasting my time. The power hour is where it's at today.
How 1 year into his term, the president finds himself boxed in on China.
Not easy. Speaking of China, that was one of the topics I talked about with Chuck Robb.
China. Really, what drives earnings shift.
Right. All right. So
Well, well. Would you look at that? What's up, Mike, Sam, White Run, AJ, Twilight?
Spy is just watching.
Anno Domini, I'm really glad to hear that. Appreciate you, Doc Breezy. We're going to do everything we fucking can to capitalize on it. We didn't cause this market crash. We're just here to make sure that we get fucking rich off it. Because I'm not going to let the goddamn Federal Reserve and the fucking SEC screw me like they did back in 2008, 2011, 2013, 2015, 2018, and 2020. Fuck these guys. Fed signaling at least 3 interest rate hikes in 2022. Yeah, they're signaling a lot more than 3 interest rate hikes. I'll tell you that much. Expect 6. Expect 6. Hopefully J-Powell's not too much of a pussy, and on January 26th, when they have a DOJ meeting, I believe it is, he announces, I'm sorry, the Fed meeting, he will announce a rate hike of at least 1/4 to half a percentage. But I highly doubt that's going to happen because he's a spineless bastard and he's just trying to get reelected. Yeah, Bloomberg says 10% correction, but the NASDAQ's already corrected 10%. It's fucking nonsense. %10 correction so far, maybe, is the words they were looking for. Shut these blinds just a little bit. Rick James, I hear you. No, there's a fan over here, so the exhaust pulls it that way, no matter where. So, yeah, I hear you. I'm like my cigarette's right in front of the fucking camera anyway. Hope the smell doesn't bother you though. Netflix is up 0.99. Amazon is down 1.45. Ain't that cute? And there we go. The NASDAQ's about to go down 1%. S&P is down 0.8. The Dow Jones 0.83. Canada 0.28. Chile 0.68. Mexico about the same. Ain't that something else? Told you so. Buying pressure on Fidelity. Retail buying orders for AMC, is about, what does that look like? About 75% buying. You think 75% of people buying is going to cause stock price to go down 11.4%? No, that's naked shorting and shorts being taken out now, which are going to have to be covered January 24th through 28th. That's when AMC and GameStop are going to run, in my opinion. Look over here at GameStop. Sorry, my thing's tweaking. Almost entirely, 80% almost buy orders. That's pretty fucking bullish. What the fuck, guys? We're going to be rich or what? I can't tell. Look at this.
We need cash.
We don't need cash. I'm asking you, motherfuckers. What do you think? You got a brain? You got a fucking mind? Look.
I think he means he wants cash money.
Yeah.
We want gold and silver. We don't want fucking cash, like useless fiat.
Like if they would tell me over there, they won't because they're all about being.
Daddy Goomba, do me a favor, mute your mic.
But if they told me I didn't have to come in.
Thank you, brother. What's up, Pam? Pam the realtor. You're the shit. You're the best realtor in SoCal. Take another peek. And the NASDAQ's down 1.06%. My fucking money printer is about to activate.
I'm going to buy King Griffin's mansion in cash.
In cash? You're going to buy it in silver bars. And you're going to get it for pennies on the dollar at that.
That too. I'm gonna actually make it so the walls are made out of the silver bars that I make. Or I get from physical silver. So, yeah.
Who wants to go take a look at my baby the VIX? Let's see what the hell's going on over there. Yep, S&P is down almost an entire percentage point now. The NASDAQ 1.1, Dow Jones 0.9, Mexico 0.8. The fuck, guys? How many times I gotta say it? Market crash imminent. MOASS imminent. We're going to the goddamn fucking moon. Log into my IBKR real quick so I can take a look at all of my VIX and my watch list. I want to see that big VIX. Let's go. Get the big VIX in here. What do I think about UVXY position? I think UVXY is all right. Not a whole lot of liquidity, but it's better than nothing. I like the UVXY a little bit. Damn, my account looks pathetic. That's all right. That's what calls do. That's what calls do before they print. Haha. Fuck yeah. J-Pow, get that goddamn money printer ready because you're going to fucking need it. You're going to fucking need it, man. Look at this nonsense. AMC is down 2.6, GME 2.2. The VIX is up 4.83 at 23.89. Hey, Think Tank, did we do good on buying that fucking shit or what? BBIG is down 12.52%. It was down 20% at some point. Why is it down only 12% now? Because it's starting to come back up. The volume's still coming into it. Look, 170 million volume. I think the BBIG might actually end up green before the end of the day. We've got 1 hour, right? No, we got 1 minute. 1 minute, excuse me.
15 seconds.
Yep. So it's going to end up red on the day, but I'm going to hold my calls for BBIG till tomorrow because I think it's going to run green tomorrow. The VIX is at 23.99. Fucking sick.
Ding, ding, ding.
Fucking sick. That's the bell. 23.83 on the VIX. She's still moving around. Oh yeah. Up $1. 4.56 on the day for this bitch. Take a look at the markets. S&P is down almost an entire percent. The NASDAQ 1.15. The Russell 2000 is down 1.25. The S&P 500. Oh, this needs to refresh over here. Yeah, that's pretty fucking nasty if you ask me. Let's take a look at the E-mini futures. Down 0.6, 0.6, 0.6, and 1.32 for the Nikkei. That's a pretty good day if I say so myself. Doppelganger, I've got it. There's a link to it, I think, in the YouTube description. Oh, Cash is just chilling. He's just not around right now. No, Walter White, don't make assumptions, man. Cash is in here all the time. He's just not around right now. I appreciate you, Argos.
Your shirt ripped or is it nice?
Appreciate you, brother. Yeah, this is fucking nastiness right here. See what kind of bullshit these U.S. reports are actually giving us. I loaded up on calls, on more calls for things like the VIX and UVXY and shit like that, VXX types indices and stocks that were cheap. And I'm really happy that we did because the VIX was down, what, 1.5%, 2% today? And I know I wasn't the only one in the think tank that was making some purchases. So to be up 4% right now is definitely very positive. Feels fucking great on this because I'm going to fucking hedge. I'm going to hedge. And I'm going to use AMC and GameStop to hedge as well. But before we get there, I'm going to use other things to make sure we can maximize our actual investments and our leverage on my baby. At least that's what I want to do. To each his own, you know. The Russell 2000 down 1.6%. Cost down 2.5%. Triple Q is down 1.1. The short, Ultra Pro short 3x leveraged triple SQ triple Q is up 3.5%. It was up about 5% yesterday. That's another good hedge, I think, when you look at things that run inverse to the market. Except it's a little bit more expensive than the VIX, although it is an ETF, so you can exchange for shares. You can't execute your calls for shares if they're in the money. Whereas with the VIX, because it's an indices, if your calls go in the money, when you execute, they literally will send you cash to your account, which I think is pretty fucking cool. That way you don't get stuck with shares. But again, shares are nice if you think the price is going to continue to go up. So it all depends on how you want to play things. You can use multiple different avenues of both ETFs and indices. There's multitudes of things you could do. I'm not a fan of puts personally as much as I am of calls. I'd rather take out calls on something that runs inverse to the market than puts on the SPY. Oh, my girl needs a nap. I'd rather do that than take out puts on the SPY, because puts have very limited return and calls have almost unlimited return. I'll be right back. I'm going to go. She's in the other room anyway, but I'm going to make sure she gets to bed. She needs a nap.
Where's Mama? Ah! Bye-bye. Hi!
You all right over there? Don't hurt yourself. J. Leo, gonna give you a server mute, brother. The fuck is this guy? Let's see if anything's changing. Let's see who our top percentage gainers are. Let's do a market scan, just to see who our top percentage gainers were. Yeah, dude's over there pushing one out. I don't fucking know what the hell he's doing. No offense. Angel said he made $7K today paper trading. It's pretty good, man. Glad to hear that. Very fucking happy for you. Let's see what this asshole's got to say.
And get your booster.
Oh,
Look,
shut the fuck up.
We're also increasing testing. Should we have done more testing earlier? Yes. But we're doing more now. We've
Too
gone
little,
from
too late.
0 at-home tests a year ago to 375 million tests on the market in just this month. If you buy a test at a store, your insurance will reimburse you. On top of that, we're making 1 billion at-home tests available for you to order.
This is what he's talking about while the market's fucking tanking. Yeah, he's not doing a goddamn thing to help out. U.S. dollar weakens but keeps positive outlook. Sterling rises after UK data. Treasury yields ease. 20-year auction sees strong demand. Wall Street stocks sell-off deepens. NASDAQ confirms correction. No shit. Never would have imagined that. Never would have imagined that. Stocks steady, bond yields jump as inflation fears crescendo. That's a fancy way of saying that people are dumping their fucking stocks. Oil prices hit their highest since 2014 amidst an outage on a pipeline from Iraq to Turkey and global political tensions, stoking fears of inflation becoming more persistent and propping up the dollar, which hovered near 1-week highs. It's funny how in the morning U.S. stock futures rose as strong corporate earnings reports helped investors temporarily shrug off inflation concerns, with the S&P 500 futures up 0.33%. And as we clearly discussed and stated, the U.S. markets are in complete fucking disarray and dropped to an entire percentage point negative for the S&P 500 and another 1.15 for the NASDAQ, another 1% for the Dow Jones. You know, and everything else on this continent and North and South America kind of followed suit pretty much. So where do you think we're going next? All-time highs all of a sudden? Come on.
Yes, man.
Yeah, Maverick says it was all a fake on the Dow early. BBIG is going to all-time highs. Pilot, I think you're absolutely right, man. BBIG is going to go to new all-time highs. CY says, who bought all the $145 AMC calls? Looks fishy. $500,000 in options that will never pay. Who makes the money? Yeah, a lot of people bought $145 calls for January 21st. And I personally feel that they need those January 21st AMC GameStop calls out of the money. So there's a very good chance that the market actually has a good crash tomorrow in order to put even more calls out of the money and leave a lot of their puts in the money, for they being market makers. In addition, if the market doesn't crash tomorrow, like a catastrophic crash, then I think we're possibly going to see that on the 26th when there's the next Fed meeting. Jerome could definitely scare the shit out of the market and cause a huge market crash on January 26th if it doesn't happen tomorrow, January 20th, which would leave AMC and GameStop at lows we have not seen in a long time, but would be a prime buying opportunity for call options and shares, because they would probably run on January 27th and 28th and possibly even the 31st into February. The reason being because there are a lot of futures contracts, forwards contracts, swaps, ISDA contracts that need to be rolled or closed out, or shorts covered, which is not going to happen. So these things need to be rolled, and it's going to be those dates when it begins to happen. So I truly do think that we start seeing like the real market crash. What you've seen so far is the market correction. The market crash has to happen, in my opinion, if not tomorrow, the 20th, or the 21st, it will happen by the 26th of Wednesday. So that would give a lot better of a starting point for hedge funds and market makers to begin buying AMC and GameStop if AMC gets down to, $9 or $10 a share. And it would give them a much better opportunity to start covering those positions and rolling all those contracts and futures and ISDAs for GameStop if the price was at $50, $60 a share. It would put a lot of their puts in the money to have January 21st calls, even more of them than currently, out of the money, because then they would also be able to de-hedge by selling those calls that they had purchased to hedge against calls that are, for example, currently in the money, like $18, $17 strikes. if the price goes down to $10 or $15, they could sell off those shares or short those shares that they have hedged for the $18 and $17 and $16 strike price, which would create a double negative effect on the stock price. That's one of many ways in which that they're going to try to bring it down, in addition to the possibility of straight wash sales. I wouldn't be surprised if AMC gets to $8 before it goes to the moon. I won't be surprised if GameStop gets to $50 before it goes to the moon. But I'm going to fucking buy it when they do, when they get to that price, or anywhere close to it. So I don't know what anybody else is going to do. I recommend you deal with your own risk tolerance, and to each his own, you know. But I'm feeling very confident in these plays. Global markets, stock steady, yeah, great. I don't know what you guys are doing, but I can tell what retail's doing. And retail's not selling AMC. And retail's not selling GameStop. Even Tesla's barely, you know, is being bought more than it's being sold, and it's down. You gonna tell me that 75% of people that the buy-sell ratio is in the 75% green, but the stock's still down 11.4%? Does that make sense to you? Absolutely not. As the stock market goes down, AMC and GameStop need to be shorted, and they need to de-hedge those for those calls that are no longer in the money. And that allows them to short them even further, creating a double and a triple negative layering effect on the stock prices. That allows them to maintain their margin position. Pretty soon, something like Evergrande or Logan or Country Garden or Shimao, you name it, there's 150 Chinese real estate developers, amongst other things, that are going to go bankrupt. First one at a time, and then many at a time. Currently, there's a Chinese developer, name starts with a G. They own a shipbuilding company in Germany. That company went bankrupt 6 days ago, and now their Hong Kong real estate development, I think it's like Jinzhou or something like that, or Jinju. Now they are also going bankrupt. It's not a trust me, bro. You can go look for it on Reuters if you really want to. I don't feel like fucking looking it up though. I'm sure a lot of you people have already heard about it. So now their German shipbuilding company has gone bankrupt, but because of that, now their Hong Kong real estate development company, their mother company, is also going bankrupt. You see the contagions not just between banks, it's between everything related to supply chain, like shipbuilders, real estate, like real estate developers, investors such as you and I that buy these real estate, you know, from these developers that are never going to get fucking paid or never going to get apartments. Bondholders at these banks, I mean, bondholders like you and I that have our pensions and 401ks invested in these banks, like HSBC and BlackRock and Vanguard, that are investing in these Chinese developer bonds. And they're going to be complete shit. They're already complete shit. You have BlackRock losing $1.5 billion from the state of West Virginia, and now Texas is going to follow suit because West Virginia is pulling $1.5 billion of their investment from BlackRock because of their shady Chinese development investments. BlackRock and Vanguard and HSBC, these banks and prime brokers, are able to use dual-purpose notes and auto-callable yield notes in order to directly put your pensions and 401ks into these Chinese developers. I'll be right back. Come on, baby girl. So there are ETFs and money market funds made by these corporations, and they contain some good stocks on the top layer and then a whole bunch of shitty Chinese bonds amongst other things on the bottom layers. And these are tranches, basically tranches of mortgage-backed securities, collateralized debt obligations, super senior synthetic collateralized debt obligations. You fucking name it, they're in there. And they're trash junk bonds from companies like Evergrande and Country Garden and Shimao. And they're in your fucking accounts right now if you have a ETF, a managed 401k or IRA or ISA account, either in Germany or in America and Canada, many places around the world. So, if you've been watching my channel for a while, you should know that the stock price here means absolutely nothing. At some point, one of these catalysts that we've discussed, or that you may not even understand, is going to tip things, one of these dominoes over, and the sorry excuse for a market pump and dump that you saw today by the Fed and these banks, BlackRock, Vanguard, State Street, Susquehanna, Citadel, you name it, all these hedge funds, market makers working together, it's a sign of desperation. There's no liquidity left, really. And the Federal Reserve is tapering, but they continue quantitative easing. However, they are slightly reducing the amounts. The Federal Reserve balance sheet is directly correlated with the S&P 500. And as they continue tapering and as start to reduce their balance sheets, the S&P 500 will follow suit. But before that happens, the stock market will fucking crash. I don't see how they can get out of January without a 50 to 65% market crash. Conservatively. Crypto, probably 70 to 80%. Because all the money in crypto is the banks and market makers' piggy bank. And they're going to smash it like they've been slightly taking money out of it lately to get, Bitcoin around 42,000 in order to put the money in here. And when this shit tanks, they're going to smash their crypto piggy bank and put it in here. They're going to leave crypto bag holders. They're going to leave stock market bag holders. Tomorrow's going to either be another day just like today, if it's not a complete market meltdown. I mean, a complete market crash. And again, I say if it's not tomorrow, I think it absolutely has to happen by the 26th of January, 2022. It's an inevitability. And once it does crash, and I make a fuckload of money on my inverse plays to the immediate market crash, I will take that and invest it where I believe it's going to make me 50,000 times more. That's AMC, GameStop, MMAT, Sundial, COS, things like that, BBIG, BBBY, heavily shorted stocks. Because they will run. Plain and fucking simple. On that note, I want to wish you all peace and wealth. I want you all to make a fuckload of money. But don't do anything just because I said it was a good idea. Please go out and do your own due diligence. Figure out what's best for your financial situation. And don't let these guys pull the wool over your eyes again. Don't let it fucking happen. So I don't know about you guys, but I remember 2008, 2000. I remember Occupy Wall Street very clearly. Good luck, my friends. We're gonna be fucking rich. Gonna be so goddamn rich. Okay, 3, 2, fucking rich. I want my fucking money. Griffin, I want my fucking money. Yeah, motherfucker. Thank you, everybody. Much love. It's that new FINRA filing I was telling you guys about. Hedgies are fucked. It's fucking going down.